basis is a tricky concept and sort of a tax techie thing. It's real simple when you go and buy a stock. So say I go and buy NVIDIA and I pay $100 a share and I sell it at $300 a share. My basis is that original $100 and I have $200 of gain. Just like when you own stocks of public companies, you have an investment in your S corporation. And with the S corporation, your basis also has to be calculated and it has to remain positive. Lots of times, if you borrow money in your S corporation and buy assets that can be depreciated, and depreciation is just the use of assets over a period of time, but with the tax law right now, you can depreciate it fairly quickly. You may create losses, but you don't have basis. You don't have investment in that corp because the losses are being created by the money that's borrowed. That's when your CPA at the end of the year will ask you to put money into the corporation so that we'll be able to take advantage of those losses, or those losses will get suspended. So the concept of tax basis for an entity or for an S corporation is actually just the amount of money that you actually have invested in the company, either through personal loans that you've made or through contributions that you've made to capital. And it's important that when your CPA does tell you this, that you actually put money in the company or loan money to the company so that you don't have to recognize unnecessary capital gains at the end of the year because you don't have enough basis. As crazy as it sounds, your basis only matters one day of the year, and that's the end of your tax year. That's December 31st. So when your CPA asks you now to put money into the corporation, you'll understand why they're making this request. If you have questions about this or about any other topics, please feel free to email questions to questions@mydentalcpa.com, and we'll be glad to try to help out any way we can.